Hello, everyone. Good day to you all. This is Forex with me live on another strategy again. Now, many people has been coming in to my previous double MACD strategy to seek for it and also to inquire about it. But today, I want to give you MACD itself and my setup for MACD using alligator um, indicator. So I'm combining alligator indicator and MACD together to actually show you the type of trade I'll be taking. As easy and as simple as it is, let's check it out. Now, MACD is known for divergence. I want us to know that. MACD is known for divergence. And why divergence? Divergence set us in pace for a possible reversal in the market. Also, divergence set us in pace for a possible continuity in the market. Let me give you an instance of what I'm talking about here. What is divergence? Divergence means when a market is making a lower low. For instance, let's check this. When the MACD is making an equal low like this, sorry, when the market is making an equal low like this, the MACD will be making a lower low and a higher low. Or when MACD is making a higher low like this, higher high like this, sorry, when the market is making a higher high, lower high, sorry about that, a higher high, a lower high, a higher high, yeah, this is the lower high, this is the higher high. The MACD will be making a higher high and a lower high. So that is divergence. So this means that there's a shift in the momentum in the market. So I'm explaining in details what MACD used to do in case for anybody who doesn't understand the work of MACD and how to use it. So this is the explanation for that. Then the next thing I want us to note is as well, MACD helps us to understand the volatility of the market. Now, in that case, where a market is highly volatile, for instance, like this case, look at here, from here all the way down, you can see how MACD push out heavily. Now look at here, as the market reverses, can you see? This means the momentum here is very low. And that means if I see a low momentum here, which is lower than this, I can continue my possible trend. I can make a trade based on trend continuation, pattern. So let's see another one here. This is a good example. As you can see, this is also a low momentum here. As the market drops down to this place, it's about to pull back, but the momentum here couldn't gather up. Then it pulls back to the downside. The momentum as well couldn't gather up. All these sections here, these sections here, all the sections here, from this point to the other point, they are not as high as this section here. You can see, you can see. So this is what we call the momentum. So, and we need to trade when there is high momentum. Like as you can see this now, this happens to be a high momentum. After this lower momentum, then we have an high momentum here. Then we have a lower momentum here, which shows us a possible reversal. Before you know it, another high momentum also came up here. So this is another way of understanding or using MACD. And these are the things we check anytime we need to trade. And why do we need to check them? Because we need to confirm whether there is momentum in the market before we enter. Because if there is momentum in the market, definitely we are trading with the bigger banks, the institutions, and all the rest of that. Or we are trading the fundamentals. But if there is no momentum in the market, that means you know, everybody is just there. So market is just working on traders like me and you based on the little push we can actually have. So that's by the way. Let's get into the work of the MACD with alligator. Now, what's the condition? I'm trying to see and search. Now, let's see from here. Here's the divergence. You can see an equal high here and a lower high here, which means there's a possible momentum shift in the market. After that, the market breaks and retests. Many people will buy from here. Me, as a momentum trader, I'm going to trade this to the downside like this. This is a equal high and the market is breaking down. As you can see, I just spot once it's after zero. So the first or the second, this is my own breakout point. I'll enter the trade, then my stop loss is going to be behind the higher highs here. So then I'll trade the trend, trade the trend, trade the trend. So if we trade this trend and see what happens, you can see there's a divergence here. It told us that the momentum is about to close. That's it there. But immediately there's also a breakdown. So which you know it nullifies this setup here. And you can see a great momentum came up, which even came higher than the previous momentum. So that's the breakout there, another breakout. And you can see this is another divergence coming up here, but it's breakout again and brings about another higher momentum. So after that, market begins to pull in, came back, give us a lower momentum to the upper side here. And as you can see, it's because what we call divergence. From this divergence, we can start seeing a momentum shift. This is lower low, higher low, lower low. So higher low, lower low. In this case, if I'm making this trade, I would have, get out around this point. And why? Because see how big the momentum is. It's different from this very one. It's different from it. So what am I saying in essence is that when I want to trade, I'll look for a divergence to trade. Trading a divergence. So as you can see this trade now. Now let's look at a continuous divergence actually. From this previous momentum to this other momentum is what? A lower high, a higher high. Why this displays a higher high and a lower high. This is another form of divergence for continuity. So if I see something like this, I can take my trade for continuous sell. Or if it's on the opposite side, I can take my trade for a continuous buy. So that's another way to use, divergence. Now, let's see. As you can see, market actually pull out here. This is an ED divergence. It's not really serious around here. which shows that a market is reversing. As you can see, 1 and 2. Once the market hits 0, once I see a divergence and market hits 0, I can easily take the trade to whichever point is going. As you can see, it started here, came back. It couldn't break the lows here, which tells me, oh, the market has changed. And we begin to ride it up to the upside. To the upside. So this is how to trade a MACD. So what's my setup, self? What am I looking for? Now, if I'm to buy or I'm to sell, this is what I look for. Anytime I spot my divergence or a continuity, I wait till my MACD cuts across 0, and that is here. Once it cuts across 0 from the first, second, or third point, as you can see this range now, take my trade. And on my alligator is what is beyond what is beyond the alligator. This is it's beyond the alligator on the downside. So I'll take my trade to whichever position it is. Now see these two. Once my MACD push out over 0 and my candlestick is also above the alligator here, I take my buy trade instantly. So as you can see, I would have taken a profit out here. Then these are range, these are range, these are range. So now another strategy is this. If you see a MACD coming out, yeah, sorry, a MACD is coming out of 0 at this point, then I take my sell trade. If I take my buy trade here, fine. There's no doubt you will. There are some certain time you want to take trades during range, then you risk some. I will have make a loss here actually. There's no doubt about that. This actually, if I hopefully think that okay, this market is going up, and I take my trade at this second one, putting my stop loss here, then thinking it will go up, then I would have lost the trade. But it doesn't matter if I lost that. This is another breakout here. I place another sell trade. I will have won the trade. That is why risk management is very, very important. That is to say, you don't overload your pips or your lot sizes. So you don't overload your lot sizes so that it will be able to carry your account. So if I've taken an upside trade and it doesn't work, I've taken a sell trade and I've worked here. So why am I telling you this? So that you won't say that, okay, uh, this is, they told us we're not going to lose in the forex market, and now see what is happening. See what is happening. So this is a confluence here that showed us that okay, market might break out up or down, and it did break out down. See, the continuity came up from here. If a retest trader is going to trade, it's going to enter from here, which signals that okay, this momentum has shifted because this high couldn't go beyond this place. Assuming it breaks this high now, then you can be looking forward to buying the trade. So that's that about that. I hope this helps. Now let me quickly go to the settings so that this video will wrap up as soon as possible. On the window indicator one, this is what I'm using. I'm using the alligator, the 30 period, 40 and 50 period for the jaw, teeth and lips. Exponential is the method applied to the close. Then these are my colors. You can choose the color you like. So for the MACD, this is not the MACD I'm using, either this or this. 10, 26 and 1. So this is my MACD, and as you can see, this is 1 pixel and 3 pixel, and that's all. Once you have this, you can start writing on your trade and take your trade. But to get the best result, I have my double MACD, and many people have been complaining that I'm not giving it out for free. It is not a free settings. If you need it for a token, just DM on my Telegram channel. Then I'll show you the settings and tell you how to use it, combined with few other indicators. It is not free. It is going to be gotten just for a token. So I hope this helps. I hope this helps. So enjoy this long and extensive education from the forex market. When next I'm going to be coming in, I'm going to be showing us chart patterns on the forex market, especially from your mobile trades like this. Thank you very much. See you guys.